What's up, everyone? Welcome to another BTS video with King Mozart, best trading setup channel. So, hopefully, by the end of this video, you'll be able to learn how to use the change in state of delivery and also how to match it up with your supply and demand zones and inducement levels. So hopefully I pray you find this video insightful. Let's quickly get down into it and talk about the trades we took this week. We had a lot of less volume this week because of the holidays and season greetings to you from anywhere you are watching, and I hope you have a wonderful happy new year in advance also. So quickly we want to go through some trades we took. I called this week, which was yesterday. So we took NZD buy, but we didn't have any movement. A lot of consolidation, as you can see here. So, but before all this, which I did not know was going to happen, I was expecting much more movement on price. Change in state of delivery. Let me quickly explain what change in state of delivery is. Change in state of delivery is when price comes to a POI, you want to see price behave in a certain pattern. So you are not just going to be picking change in state of delivery from any point. It must be at an important key level for it to become a change in state of delivery. So change in state of delivery means that when price has been bullish, you are now expecting price to now be bearish. Now, if price has been bearish, you want to get a swing point where price will now be bullish. That is what change in state of delivery means. So one of the things I imply is when price gets to your POI, which is a demand level or supply level, for example, let's say for example, right around here, we saw price created this swing high which swept these relative equal highs, right? Price consolidated, then we had an extra leg that came up. Right before we got to this top, we had series of up close candles, right? As you can see, right here is a what is a bearish candle. For me, preferably, I like to see series of bullish candle, 3 series of bullish candle. So for me, right, right around here, for me to see this candlesticks, I am going to mark out 1 2 3. Right here you can see there's kind of a bearish candle, but I'm trying to get a very good concept where you can see 3 consecutive up close candles or down close candles, right, at a very important key level. Okay, so let me use the trade we took today to explain that. I thought I would see an example prior before this. So as you can see, price hits my demand level. How do I mark my demand level? This swing low, right, the last bearish candle at that swing low, as you can see, that serves as a bullish order block, or it serves as a demand level for me. So right around price hitting that level, as you can see, price got to that level. Before price got to this level, we had series of 3 down close candles which smashed this level. Now when you see price do that, you mark out the body of the first candlestick that started that series of candlestick. Now that series of candlestick is going to serve as a bullish order block or as a price level where you are going to buy from. It will serve as a swing point where you are going to be buying from. So off around here, immediately we had the close of this candle. As you can see, I entered off of this candle. That was my entry level for NZD USD, and I was expecting we should come around this fair value gap, fill this fair value gap, or probably go back to the inducement zone, which we should sweep these highs, right? Sweep these highs and maybe come to this inducement level. So that was my target for NZD USD, but as you can see, price has been choppy all the way. Same thing with AUD USD. AUD USD, prior before hitting this demand level right here, we had this down close candles, right? Extend that body of that close of that candle, right? That's where you will get your entry right above there. So but as you can see, this trade hit stop loss, but we are still holding on to NZD USD. So that's how you can implement change in state of delivery at key levels or swing points or swing highs which you want price to move or reverse from. Or if you want a continuation of price, for example, let me put it this way. So if you want a continuation of price, for example, right here, the series of these up close candles, right? After price breaks it, you extend that out in time, the body of the candle. Immediately price closes and we get a tap. That's your entry. The swing high that started the change of delivery, that's where your stop loss will be, right? Which is here. Then you are going to be targeting a 1 to 2 or 1 to 3 RR. That's the way you use change in state of delivery or continuation in state of delivery. For me, I like a continuation in state of delivery, which means you are following the trend. You are picking your trades with the trend. So when you see that there is a bearish trend or a bullish trend, then what are you looking for? You are looking for a bearish entry. For example, something like this, we have this bearish trend, right? Price sweeps this high, right? Makes this low, comes back up again, then breaks lower. Right here, these consecutive up close candles are where you can mark as your continuation in state of delivery or change in state of delivery. You mark that out in time, you wait for price to come back. Now most times when price is making this move in change in state of delivery, you want to see a fair value gap being created. One, it gives you extra confirmation that price will surely come back there to fill up that fair value gap, which as you can see serves up here. Entry right there, stop loss above the high, tap and get a 1 to 2, right? That's it. So that's just how you can use your words, your change in state of delivery or continuation in state of delivery. So for me, sometimes I like it to be the continuation in state of delivery, which is if we're in a bearish trend, I want to continue to see lower lows and bearish markets, more bearish markets. So um that is that for the explanation. I think one of the things we should note is change in state of delivery kind of happens before a market structure shift. So most of you guys will be like, oh, is it not better to pick your trades from market structure shift? Yes, you can pick your trades from market structure shift, but a change in state of delivery will give you quicker entries before a full market structure shift happens. You understand? Like for example, right here, as you can see, right, this swing low right around here. Let me mark it. Let me extend it out in time. That swing low right there, as you can see, it tallies with the break in market with the continuation in state of delivery or change in state of the CISD. This kind of matches up, but there are cases where sometimes CISD happens before a market structure shift. So it depends on what you prefer. But for me, I prefer the CISD because it gives me quicker entry, and when my CISD is forming, I like to see a fair value gap. So for something like this AUD USD, I was kind of it was kind of a very bad entry for me to pick off my trades from here, which I could have just waited for price to come back to this fair value gap created and fill up this imbalance. Then I plan to pick my trade after the fill of this imbalance. So right here, tapping into this 15 minutes bullish order block would have been a better entry than just picking off my entry from here and having a very tight stop loss, which price comes back to hit. So moving on to other trades, NZD USD, as you can see, the close of that candle, my stop loss was at the swing low because we didn't have any fair value gap right below here. That was why I picked my entry right there. So AUD USD was kind of a bad mistake for me to do that. So moving on, I want to show you guys what I took on gold. Took a sell on gold, right? And I've talked about supply and demand. If you guys don't know, you can go back to the videos at the end of this video. You can or go back to my channel to watch how to use supply and demand. So supply and demand are like important levels. You can buy and sell off just supply and demand. So and I use the 5 minute to trade supply and demand. So right around here, I came to my chart very late. If not, I would have entered my entry right here. That would have been my entry for my sell, right? And but I got I got the CISD entry very early right here. As you can see, this up close candles, right? I marked out the body out in time. Immediately we close below, you see that tap in right there. That was my entry right there. My target was a 1 to 2, so 500 ticks to make 1000 ticks. And as you can see right there was where I exited off my trade, and that was a very good 1 to 2 risk reward ratio. And as you can see, price still went further to break down. So if most of the times on my charts you always see inducement levels. Inducement levels are levels that I don't expect to hold. Sometimes they do hold, right? But I don't expect it to hold. So I want it to be broken. If I've held at this trade, right, I would have gotten the full swing move all the way down, which is like a 1 to 4. But I decided I was okay. It's a Friday. We don't know what can happen in the market. Um that was why I just closed my trade and I was done for that day. Also, oil, we took a very fantabulous trade on oil, right? As you can see right here, we came off of this demand level, right? After sweeping all this sell side liquidity, we swept this low right there. So, and I was looking out for a very good entry on oil. And if I extend this out, right, this swing low, then a lower low, then right here we have our bullish breaker. So but I didn't mark that out in time, but I saw that. So I was like, okay, once we come to this level, which is a very strong demand level, I'm going to watch out for price. So and price was accumulating right here, so I marked this 5 minute bullish order block. So once I don't see price disrespect this 5 minute bullish order block, then we are going for higher prices. So right around here we had this series of down close candles, right, as you can see here and also right here. So I was expecting price to close above any of these series of down close candles. We closed above this, right? We were accumulating, we came down, swept these lows, tapped into this fair value gap. Immediately we tapped into this fair value gap and we closed around here. I I actually missed, I was almost missing the trade actually. So but when I came to my chart, because that was around New York session or so thereabout, when I came back to my chart, I saw that we hit this imbalance here. Immediately I picked up my entry right here. which I would have entered off around here. So, and the pip difference from that level to here is around 20 pips. So I missed off 20 pips of this move, but you know what it is. I got my entry confirmation here. I wasn't just jumping on the trade. That was why I exited off right around here. Immediately we touched this inducement level, I exited off the trade. It was a 1 to 3 risk reward ratio. So as you can see, those series of down close candles, the close, the retest, and I entered off of this bullish movement away from the retest of the CISD right there. So that's the way you can use CISD as a means of entry for your trades. Also, currently, I'm also in a trade on BTC, and I also use CISD to enter the trade. As you can see, I'm expecting higher prices on BTC. We had an inducement level right here, this inducement level, this low. We swept this low, right? As you can see, we swept this low by a few ticks or a few pips. We came back up. This series of down close candles, sure you can see it. As you can see, it's series of down close candles, 3 down close candles. We broke through, we came back, we retested it once, twice. I made my entry right off here, right? As you can see, with my entry there. Stop loss right below the low that started the move. That the low that started the swing point. So that's where my stop loss is, and I'm targeting this fair value gap, this fair value gap, and potentially this fair value gap. So that was the trade on BTC that I took. I didn't send it to the channel, but it's just a weekend trade. Also, I took some trades on GBP USD. As you can see, we have this strong demand level, and I used to tell you guys, I mark out my demand level as my bullish order block. So right here, there's a bullish order block. There's an imbalance here. Price came back, tapped into that region right there. Entry was right around here. Immediately we got that tap, and I got that retracement of this candlestick. Entry was there, exit was right here, right? I exited off of this high, as you can see, right? That was um more like a 40 pip move. So immediately I got that, I was okay with that. Initially my main target was all the way to these highs, which is like 60 pips, but I was okay because I was risking around 15 pips on stop loss. So I was already hitting close to a 1 to 3 risk reward ratio, so I was okay with that. So that was why I exited off the market. And the reason why I'm using trading view is to show you my means of entries and exits. So I will explain my concept better on trading view. But currently, um I've been managing some live funds with OFP, and also I want to go into another prop firm, hopefully start a new prop firm also by January. So I start doing that. So I pass the phase 2 and phase 1 hopefully, and get to a live funded. It's going to be a 58K account. So I will let you guys know once I get the account. Once I'm trading the account, I will let you guys know and bring you guys on board with me on my journey on becoming one of the best traders in Africa. So I hope you find this video insightful. I hope you've learned a lot from using CISD as a means of entry and confluences, and adding it up with the confluence of supply and demand levels. Follow my Telegram group for more free forex education, and this channel is a channel where you'll be able to learn trading free trading strategies I use, and all the concepts I'm coming across or I've come across, and I want to dissect them to the market to you people. If there's any topic you want me to talk about, please feel free to write it down in the comment section. God bless you. Have a wonderful weekend. BTS out.